Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about this epic legal battle that's about to unfold between Twitter and Elon Musk, everyone's favorite tweet boy, okay, Tesla
Tweet
fanatic
boy.
over here. I know, tweet boy. I mean, he is Twitter, basically, even if he doesn't actually buy the company. But we're going to talk a little bit about an options trade that can potentially show you some profit and like what the legal case is going to look like in terms of what things will kind of center around and what the possible outcomes could be.
Yeah, and I have a lot of questions on this, so it should be good. If you like this kind of entertaining stock market content, we're just two super guys who apparently can't speak, trying to figure everything out. Give us a like and subscribe, and we'll get started.
Two stupid guys trade stocks.
2 for 2. All right.
Yeah, I like it. So, the Twitter, they're going to be suing Elon Musk over here. So, briefly, I want to give like a timeline of this whole,
Yeah, for sure.
kind of mess here, right? So, January 2022, Elon Musk started buying some shares in Twitter. Around March 14th, he finally disclosed his 9.2% stake, which is kind of interesting because, he's supposed to disclose over 5%. So, he was, I think they said at least 10 to 20 days late on his disclosure in terms of having crossed that 5% line. SEC will be knocking on his door, I'm sure, again, because he's
That
so
one's
vocal
just a
about
fine,
his
right?
them.
That's just like
Yeah.
a 200K fine.
Yeah, it'd be a slap on the wrist for him. But when he disclosed this, it actually popped the shares 27%. He's quite a famous person, and moved the position pretty aggressively there. And then of course he went ahead and made an offer for the whole company at $54.20 a share, reflecting a 38% premium over where the share price had been before he disclosed his position. Twitter initially was a little bit apprehensive to go forward with this 54.20 a share. No one's really exactly sure how they arrived at that particular number. So they adopted this poison pill strategy where they could dilute the shareholder if someone crossed the 15% line, so they could avoid a hostile takeover. Ultimately, they relented though, and on the 25th, they went ahead and just accepted his offer at 54.20 a share. Right?
Okay. It's
Should
also kind of important to note if you look at Twitter's fundamentals, it's not that good.
Yeah.
So 54.20 a share is a lot.
Yeah, I would not want to own Twitter.
I
Okay,
do like
this is why this next line
$12
is
a share.
even more asinine. So apparently, when he was trying to get financing from this, a investment bank put together a pitch deck, right, which is a series of slides where they present the investment idea to these people, and in this kind of pitch deck, it said that they could quintuple the revenue by 2028. What do you think the likelihood of that would be?
Well, hold on here. If you're not making that much money, it is easier to have an increase in multiples of money because they're not really making anything.
I completely agree. But this wasn't profit. This was revenue. They do actually have revenue.
They
They
do
just
have
blow it
revenue.
up.
Okay.
Yeah.
That would be
Um,
kind of difficult. I don't know
yeah.
how. Maybe if you buy a Tesla, that's the only way to get a Twitter account. That would do it.
Yeah, maybe. I don't know what the actual idea was. Maybe he was going to carve the little Twitter emblem into the Mars with the rockets. I don't know what exactly his business plan was in this
That'd be pretty
deck,
dope.
but must have been pretty astounding. So, then this whole bot thing starts coming up. Where Musk is reporting that Reuters report about 5% of the accounts being bots, but then the same day he tweets he's still committed to the deal. There was a class action lawsuit then launched a couple weeks later by shareholders talking about how he's kind of manipulated the stock and that sort of stuff, which interesting because obviously his nice little poop emoji going back and forth with the CEO Agarwal there of Twitter. And finally, July 8th, Musk moved to terminate the deal. He said Twitter failed to provide the information requested over the bots. And now Twitter takes him to court and sues him for something called specific performance. Do you know what that is?
No.
No. Specific performance is when you're trying to make someone do something, basically. All right. So this
Okay.
legal case is going to hinge on a couple of phrases. One of which is materially adverse. All right. Materially adverse. In order to justify that, he would have to say that the not having access to this data regarding the number of bots changes the business of Twitter And not just like 1 or 2 quarters, but you're talking about over years. It would have to be going on into the future.
I do agree with that. I gotta be honest with you.
The materially adverse. Despite the fact that one of Elon Musk's contentions was that he was going to buy Twitter to eliminate the bots.
Right. So here, do the Delaware thing. I'm gonna ask you a question.
So the reason why this is important, this case is going forward in the state of Delaware. Delaware has like the most business friendly practices. A large majority of these big business proceedings go on in the state of Delaware. This materially adverse kind of claim has only been allowed once in the history of the state of Delaware. It was a 2018 case involving Acorn something. The kind of it's a real high burden to meet is the point here. That's regarding materially adverse.
So here's the part. Once again, I'm not a. I mean, I do like Elon Musk, but I'm not like a. I'm never gonna invest in Tesla. In the words of Charlie Munger, I'll never go long and I'll never go short. Just it's a dead stock to me. But if he bought Twitter on the precedent that they had, just to make it an even number, 1 million accounts. It's way more than that, just to make it easier, 1 million accounts. Then it comes out that 15 or 20% of those are bots, and now you have all this stuff coming from Russia, where Russia's using Twitter bots to sway people's the way they think in elections, all this stuff. And the fact that Jack Dorsey actually did a thing on Joe Rogan on it's actually kind of fascinating. But how there's people can just routinely make bot accounts over and over and over. He bought a deal that was not accurate. They were not being forthcoming with their information. So then he puts out, hey, just prove to me that it's less than 5%. There's no, have you been on Twitter? It's not less than 5%.
I'm not a really big Twitter person. Yeah. So there are a couple points with that. One is he did not go into a due diligence phase, meaning there was no phase where Elon Musk was evaluating the business of Twitter in order to determine whether or not it was a deal he wanted to proceed with. He forgoed that entirely and just signed the deal. Right. So now it's after the negotiation where now he's trying to go back and say, well, wait a minute, how do we arrive at that number? Right. That's not like kosher. Like, if you already signed the purchase and sales agreement for a house, to then go back and be like, well, how do you know that like the roof was done in 1998? You know what I'm saying? Like, that's where he went back to a point that should have been contended before the agreement was signed. All right.
True, but he signed the agreement with a certain amount of users, and that users is most likely a lie. So in your house analogy, it's like, I see what you're saying. You buy the house, it's like, hold on, when was the roof done? This is them saying, hey, the roof was done in 2015. Here's your proof. And then he's like, all right, can I have the proof? They're like, no. So that's a problem.
They ultimately relented and gave him what's called the Twitter user API or Firehose data, which is just literally every bit of information coming through Twitter that gave him access to it eventually. And he was like, well, I don't know how to process this. Like, of course you don't. That's the whole point. It's like you asked for all the information, they gave you all the information, and then you're like, well, I don't know what to do with this.
This is going to be interesting here. I'll go back to that.
So the specific performance thing that they asked for, basically, they're asking the court to force Elon Musk to pay $54.20 per share as agreed to. That is one of the things that they're requesting in this lawsuit.
Okay.
They're saying, enforce the contract. We signed it. He signed it. Enforce it.
All right. This definitely does not bode well. Okay.
Yeah. So there are a few scenarios that could play out, right? They could force Elon Musk to consummate the purchase of $54.20 a share. They could force him to pay the $1 billion negotiated breakup fee that's in the contract. They could also actually find that he's responsible for a amount in excess of this $1 billion and force him to pay that as a breakup fee. Because, as you can imagine, the difference between whether the stock price and $54.20 a share is much bigger than $1 billion.
Right.
Yeah. So, or they could let him walk away from the deal and pay absolutely nothing. I think that's a pretty unlikely scenario. The other thing that's kind of interesting is that the timeline of this whole case. Normally, legal proceedings take years, right? The state of Delaware, actually, I can't remember the name, but it has a specific branch of the court system that is designed for moving business cases through rapidly. And Twitter specifically asked to have this expedited. They said the deal was supposed to consummate in October, and they would like the court to actually rule on this by September. Elon Musk, of course, is slow playing it, saying, no, don't do that. Let's play it. Let it take a little bit longer than that. We don't have to move that fast. But if Twitter were to get this expedited, like I was saying, it's supposed to be closing in October, what I thought would be an interesting trade would be looking at basically an at-the-money call and expiring in September. So an at-the-money call for Twitter, $37.48 a share, $37 call, is about $555, so $555 per contract right now. If this were forced through at that $54.20, that contract would now be worth $17.20, the difference between 37 and $54.20, meaning that you'd have about $11.65 in profit per contract, or $1,165 if you're looking at it on the contract basis, or about a 310% return.
I don't think that they're going to push it through that fast. I don't see this happening that fast. Because then they're just giving bias, because you have one person saying, no, we need time, and the other party's being like, no, go now. So I would just say you go at whatever your average rate of time is and keep it fair.
Okay. I get their argument, though, where this deal was supposed to consummate in October. And, they should have an answer by the time the deal was supposed to consummate, whether or not this is, a reasonable kind of way forward, I guess you could say.
I have not looked into this, but have you heard the conspiracy theory about why he actually canceled the Twitter deal?
Yeah, that whole thing about them having to disclose their bots in court, that sort of thing. Is that meme?
So he can get away with selling a bunch of Tesla stock.
I have heard that as well, yes, because he had to raise money in order to actually go forward and buy that 9% stake, and then he's going to have to probably go sell some more Tesla stock in order to have pay for his lawyers and legal defense here, like yet another lawsuit for Elon Musk. It's the ironic part here, and I heard this joke. It's not mine originally. Is that Elon Musk finally trying to pull out of something in the same week that we learned that he now has 10 children? Pretty funny, don't you think?
Yeah, that's pretty wild.
At least he's learning to pull out, I guess.
Oh, and with that, we'll end it. That was a good one. Solid.
Yeah. Catch you in the next one.
Later.